Hi, Dan. Please welcome to Ann Arbor Hub. Can you introduce yourself?
Yeah, my name's Dan Radinoff. I'm a mortgage broker with Lime Tree Lending of Michigan.
A lot has happened in the last 24 hours. I know Thread came out. Have you been on Threads?
No, but I saw people posting about it.
Yeah, okay. But that's not what we're here to talk about. Okay, seriously, a lot has happened and go ahead. Just just go for it. Just talk. Just tell us a story.
No, it's too sad.
Do you want
Yeah,
to
I mean,
tell what
rates are pretty
happened?
much already at their highest for the year. The prevailing thought was things would come down May 10th, kind of once the inflation report came out. Obviously, that didn't happen. They've continued to get worse. And then today, stronger job and economic data, bludgeoned rates. I would equate it to being in the ring with Mike Tyson and getting knocked out in less than a second. So, yeah, down on the mat pretty hard. It was a pretty big shift overnight, between 60 and 70 basis points at most places.
Okay. So we were supposed to start this series. Well, don't forget to like and subscribe and get notifications. We'll be posting once a week in order to give you some sort of a mortgage update before the weekend. I said some sort of because we were supposed to be talking about a different topic, but we came out of the gate with the new information. We were supposed to be talking about how things have changed in the real estate market over the last 6 months because of the increase in mortgage rates. Do you want to, or is it an increase or did interest rates just go back to normal? Have they been on sale for the last 10 years? And, now it's just, you tell us.
Yeah, I mean, there is that way to look at it. Obviously, historically, rates are still low, but I think that's easier to digest for those of us, who aren't in our 20s, potentially looking for our first home. Because if I'm 25, I couldn't care less, what my parents' mortgage rate was. I see, threes and fours. Obviously, that was an extreme discount, but I'm hoping to hopefully find something like the fours or fives. And even up through this year, it was still possible to get in the fives with no broker fee, and now we're pushing seven. So it's definitely a lot of sticker shock for a lot of individuals, and even some people who've been pre-approved for a couple months. I'm unable to find something. I think it's definitely important for the loan officers to really stay in contact with them and let them know, like, hey, rates are 0.5% higher. This is what the new payment would be. Is this something that you're comfortable with? Because I am hearing stories of individuals who are pre-approved, their loan officers not relaying that information. Now they have an accepted offer. Now their payment's $150 higher and they're not comfortable with it. So it's definitely an ongoing conversation on days like today. Like, as loan officers, we have to reach out and be like, hey, the market just took, like I said, a Tyson sized beating in the ring. So is this still something that you're comfortable with, or do we have to kind of change course until hopefully rates can cooperate a little more?
Okay, so Dan, with everything that's changed today in the mortgage market, what are we looking at for our buyers? Are there any? I mean, I get it. It's sad news that the number. What numbers are you? I mean, you said pushing seven. So if I were to lock in an interest rate today, what would my interest rate be?
There are a lot of factors like credit score. Kind of the rule of the thumb, though, is for well qualified buyers, without any buy down, aka points for the rate, you are probably looking in the upper sixes at this point. Whereas, like literally 2 weeks ago, we probably could have squeezed out 599.
Oh wow. Okay.
Yes.
And can you give a little bit about your background? Because you're a broker.
I am. So prior to opening the brokerage about 2 years ago, I was a sales lead at United Wholesale Mortgage. They're now the largest lender in the country. So I was there for 7 years, worked on a national scale, pretty crazy scale, actually. So I've closed over 6,000 loans in my career. And that's kind of my biggest selling point. It's like, hey, you could take some of the top loan officers in the country on the retail side. Seeing 300 loans a year is not a sustainable pace on that side of things. And it would take them 20 years to see the number of loans that I've seen. So that's kind of my biggest selling point is anything you can dream of, I've seen it. And just when I keep thinking that, days like today have me walking around like Michael Cera in Arrested Development. I don't know if you've seen it, but slowly head down, sad with the Charlie Brown and Snoopy music playing.
Now, as a broker, when you speak about what's going on in the market, if I'm correct, you have access to different loan products and different loan packages, right? Where
Correct.
when you go to like the Bank of America, they only have access to what the Bank of America loan is. Or, you have, so not only do you have a lot of experience and you've seen a lot over the times, but also you have a lot of access to many different lenders. You can get your money from more than one place.
Correct. Yeah, it's not a one size fits all. You can kind of customize things. Like, there's certain lenders who are better with lower credit scores, certain lenders that really focus on higher credit scores. So you can kind of weigh all the options when you're placing a loan and just kind of know what fits best for each potential buyer.
So, with this huge change in the mortgage market, do you see any benefits at all to our buyers who might still be shopping? I understand you will be coming up with different ways to remedy it and make it a little bit of a softer landing for our buyers, with buy downs. You mentioned that. But
Well, I just think for those who are comfortable with where the payment would be, there's an advantage for just, your rate's not going to get worse. Your payment's not going to get worse when you're in on a fixed rate. Hopefully there's refinance opportunities down the road, but you have so many people that are potentially waiting for rates to get better. They think that pricing is going to stall, but you're avoiding a lot of future competition if rates do come down. And homes have been appreciating. So there's really not a lot of signs that that's going to stop anytime soon. So now you've potentially saved yourself from all these individuals entering the market. If you're comfortable with where things are at now, you are saving yourself from a lot of future competition if you're able to find something now.
so I'm an economist. That's my background. There aren't a lot of jobs that have the title economist. So, we do different things like watch real estate markets and, figure out how to have fun there. And this is classic economics 101. Price and interest rates have an inverse relationship. So as interest rates go up, maybe the prices will come down. I mean, they already have come down a lot. We don't have the multiple bids in Ann Arbor that are going between 75 and $125,000 above list price on a six or an $800,000 house anymore. Sometimes a $450,000 house. Um, but I mean, we're still getting like 25,000 above list price, things like that on average, with the appraisal shortfall being covered. Um, but it looks to me that with this change in the market currently, it is going to free up a little bit of space for people who, like you said, are comfortable with the price, are comfortable with the monthly costs, because I mean, you have to live someplace. And you know, our rents are going to go up too because interest rates went up, even though the people who own the property didn't buy it during the, but that's okay. I mean, I don't know when they bought it. Maybe they bought it in 1980 when the interest rates were, between 13% and 18%. I don't know what they did, but they probably refinanced since then, which brings us to our next point that, sometimes we tell buyers the rates are a little high now. Maybe you can refinance later in the future, but we don't have a crystal ball. You mentioned that you woke up in the morning and you were shocked and awe.
Yes, there may have been some loud things shouted when my computer fired up.
Wow. Okay. Okay. So now I know. Now we know. Wow. Thank you so much for your update today. We'll be talking to you again next Thursday, and maybe you'll have some different news for us.
I look forward to speaking next week, and I look forward to hopefully a more positive and cheery update for sure.
Thank you. Thank you.
Thank you.